Here to discuss is Wells Fargo chief economist Tom Porcelli. He recently published a note examining AI's potential impact on the U.S. economy. How do you like to have to answer this one, Tom? He's like, wait, I wanted to talk about Joel. Yeah, exactly. I wanted to talk about GDP.
And then you tee up the Bernie comments.
But let me also frame it this way with Google's equity raise and everything.
Yep.
Everyone really wants to know what impact is AI actually having on the workforce party. What can you tell us?
So, one, the amount of spend is staggering. I think it'll persist. It's adding close to a percentage point. I mean, if you import adjusted, it's a little less than that. But whatever, even if it's 0.5%, it's still adding very meaningfully. When we look at the actual impact on jobs, the impact right now is like it's non-existent at all. And so if we look at like AI usage by sector, and then we look at the change in jobs by sector, and you put that like on a scatter chart, as I've been fond of saying, it looks like I sneezed on the page, right? Like, so the dots are everywhere. No, the R is basically
some
zero.
companies may have been cutting jobs, some may be adding, but Sam Altman yesterday was on this program, and he said the companies that are saying they're cutting jobs because of AI, it's a sleight of hand. Yeah,
so there's no question that there are some companies in a company-specific way that are probably seeing that effect. But in the aggregate, again, at the sector level, it's just not showing up in the data. Not at this point.
I assume you went to college.
No. Of course I did.
Yes. I know you went to college.
So anything is possible.
I have, two and a half, 3 college degrees, so I may go back for 4. Who knows? My point is this.
You got to think about the value add of that.
Well, we're being a little bit snobs up here. And I don't mean here on this show. Yeah. I mean in the media in general, because what I think we're missing, and you've written about this, is this idea that, maybe the mid-level office job is going to get disrupted by AI. Yeah. Let's hope it's not, but it might. Mm-hmm. But guess who's winning? The trades. Tradespeople can make $150,000, $200,000, $250,000 a year without a college education because of all the capital spending going into the cycle.
Yes.
And you don't think that spending is going to slow down anytime soon?
No, I don't think it does at all. In fact, even speaking with our, the equity folks that look after tech, they expect that next year, your starting point for next year is this dollar amount today, right? Like, it's not going to move all that much. If you want to make an argument for where you're starting to see maybe some of this show up, you can look at the spread between college entrants into the labor force versus everyone else. And that spread is actually starting to widen, meaning college entrants are having a harder time finding new jobs. So you can make an argument that there's some of that happening now, but it's way too early. Like, people that are saying, hey, it's the productivity that we've seen over the last, sort of year or so, it's all productivity. It's not. It's companies basically scaling back on hours worked because they had bloated hours, in the sort of the post-COVID.
But there was, and I'm sorry to jump in on this, but it hits home because you and I both went to rural Virginia high schools.
Yes.
The majority of my high school, probably yours too, did not go to college.
Correct.
In fact, about 90% did not. Most joined the military. God bless them, by the way. And about 20 years ago, 15 years ago, remember this quote? Somebody was like, well, truck drivers should just learn how to code or something like this. Guess what? Maybe the coders should now learn how to drive trucks.
Yeah, it's totally reasonable. It's totally reasonable. I think in the end, I always use the example of my grandmother, right? My grandmother was a telephone operator, right? Like, you hit 0 and someone will pick up the phone.
So was my mom.
Yeah, there you go. Back at its peak in like the 50s and 60s, there were 350,000 telephone operators. Today, they're effectively 0. But the labor force has done nothing but grow. So I think I think that you're not appreciating the dynamism of the economy to say that, old jobs are basically going to fade.
The reason this matters is because we are going to have these competing narratives, especially in an election, a midterm year, and all of that. So if basically Bernie Sanders is positing that AI itself is not going to benefit people, therefore they need direct payments from AI companies. And so if you're telling us, no, AI will benefit people. This was the argument Dave Cody was making this week as well. He said it's going to increase productivity, raise living standards. In that case, it's harder to make the case that you need to create an additional vehicle by which to sort of have these direct payouts.
Yeah, I think that's totally fair. And by the way, I think you also have to throw the inflation part of that conversation into the mix. Because I think about someone like Kevin Warsh, who keeps on saying, well, it's going to be disinflationary. All evidence to the contrary right now. I mean, really? AI has actually been more inflationary, which, again, is just a sort of another tax.
Why is that? Because it's just raising the cost of components and hours, labor cost and all of that?
Yeah, that's exactly right. I mean, just look at the price of compute. And by the way, you can see it in PPI. I mean, it's literally, the line on that number is literally moving at a parabolic pace. So it's having an effect right now on the inflationary side.